Holy smokes, everyone. In this video, we're going to be going over Donald Trump, the Orange Man's latest prediction on inflation that he was just speaking to Fox News today. He talks about inflation, what's happening to America, what's happening with the economy, with the stock market, with the jobs market. So we're going to go over this interview from Fox News, go over what he's got to say, and then I'll also go over my analysis on what I think is going to be coming ahead. Okay, everyone, let's get straight into it.
How about the state of the economy? Do you think it would improve if we ended these $300 a week unemployment pay?
Well, nobody wants to go back to work, so that's a problem. But nobody wants to go back to work. Nobody's ever seen anything like this. But the economy, you've got inflation that's going to be rampant. And we've seen inflation before you have. I remember you a long time ago when the world was cratering and Jimmy Carter and all of this stuff, the things that were happening were not even believable, where interest rates were going up to 22%. Prime rate was over 20%. Yep. It's what's going on now is exactly the same, but it's worse. It's much worse. They're doing now guarantees, and you already have massive inflation. Look at food prices. Look at gasoline. We had energy independence, and now that's gone, Stuart. It's gone. Think of it. We were energy independent. When I left, gasoline was $1.87. Now it's going to be double that. It's going to be triple and quadruple that. But food prices, everything is going. Lumber for a house is up at a level that it's never been. So it costs much more for a house.
If you're right,
massive inflation.
Wow, okay, everyone. So he's going to break down what he's just said there so far. So he says there's people not wanting to go back to work because of the unemployment benefits. They talk about the unemployment benefits ending, and I think that could be something that's bad for the economy because, like I said, there's been all this stimulus to prop up the economy with all the stimulus checks, with unemployment benefits. Many people have been making more money collecting unemployment benefits than their real jobs. So when they do go back to work, even if they are working full-time, if they're earning less, and they aren't able to consume as much because their income's lower, that will be bad for the economy. So definitely that's going to be bad. He also talks about soaring lumber prices, which is definitely contributing to building costs, but lumber prices are starting to fall. And he is saying, we've got rampant, dramatic price rises in food. So we'll just have a quick look here. So looky here, everyone. Look in May 2020, the commodity food price monthly index was around 85. But since May last year, it has gone completely parabolic and is now at 117. So food prices are getting dangerously high, like when we saw here in 2007 and in 2012. If we get back to these levels, and this is global food prices, not just in the US, we're going to see some big issues because when people get hungry, they get grumpy.
And it's going to be very
If you get massive inflation, Mr. President, you get a crashing economy and a crashing stock market. Is that your prediction?
Well, I don't want to make predictions. You know what? Because I just think it's not good if I do. But I am very concerned about what's going on. I'm very concerned about some of these bills. And if you remember, I wanted to spend a lot of money on infrastructure, but it was on infrastructure to rebuild our roads and bridges and tunnels, not to do things like they're doing, handing money away and giving it away to foreign countries.
Okay, so he's asked there, will high inflation cause a stock market crash? And you can see in there, he goes, I don't really want to say that because, Donald Trump, he's kind of like a Wall Street guy. He likes, the stock market going up. That was something he was very proud of when he was president. So, of course, he doesn't want to talk down the markets. But he did say, it is going to be bad. And obviously, you have to kind of read between the lines there. You could tell here he was kind of saying without saying, yeah, if we do get high inflation and the Fed has to lift interest rates, then, of course, we are going to see a big stock market crash.
Can I just go back to one thing you said a couple of minutes ago? You say people don't want to come back to work. You think that the pandemic and the lockdown, did it change the workforce forever? Expound on that a little bit. How did it change it?
Well, it might have, for at least not forever, I guess. But people's attitude on work seems to be different beyond the money that's an incentive that they not go to work. But people, I don't know. It's You know exactly the purpose of your question. Is interesting because did it change their psychology on working? Is
Yeah.
really sort of, I
Yeah.
think, what you're asking, not just the money
Yes.
incentive, because eventually that wears out. What I am surprised is that employees, you would think they'd be more loyal to their employer. So when the employer calls and he wants them back, you'd think they'd go because this is just temporary, this money. But there is a different feeling out there, in my opinion, and I think probably in your opinion. So it may have changed the level and degree of people wanting to work. It may have changed it, Stuart. There's no question about it because you see such a
I think
difference.
so, maybe.
Okay, so then you can see there they kind of talk about how people's psychology for work or wanting to work. It seems like, according to them, it's changed. I don't know exactly for everybody if it has changed, but definitely the stimulus and the lockdowns, it definitely has seemed to had a big impact on the way people work or the way they want to work. If they want to work from home or want to have more flexible working arrangements or go into the office, this definitely has been a game changer for the workforce and how people work. And it'll be very interesting to see what happens once the unemployment benefits do end. Now, again, going back to one of the biggest issues of 2021, inflation, because the Federal Reserve and the government officials keep saying, don't fear, it's just temporary. How many times have we heard the government and the Federal Reserve or central bank say, don't worry, it's temporary? Well, you know what I do when the government says, don't worry, it's temporary? That scares the bejeebers out of me, because they also said, we'll just take the gold standard away from the dollar, just temporary. They say a lot of things, but when the government announces a temporary program, nothing is more permanent than that. And what you have to know is, with the way they record CPI, etc., we're having deflationary and inflation at the same time. Look at this. So if we look here, we can see that all the mandatory things, or mostly mandatory, are going up completely parabolic. We can see here from 1997, this is up to 2017, but you bet it's even higher now. We're having things like college tuition fees are up over 150%. Education is up 150%. Childcare, Medicare is up 100%. Household and food and beverages and public transport is up around 50%. But we're seeing things like new cars, clothing, software, toys, TVs, all the discretionary items, all the items that aren't mandatory, are having deflation, when the things that are essential to human life, the things we have to have like food, housing, transportation, education, are skyrocketing. And obviously we're having crazy inflation in the commodities. Like, look at the energy sector for the commodities. Ethanol up 71%, gasoline 56% year to date, crude oil 43%. Some of the agricultural commodities, corn is up 41% year to date, canola up 40%, lumber, even though it's fallen about 23% over the past month, it's still up 40% year to date. And for all the coffee, caffeine addicts, you're about to pay a lot more for your coffee. Coffee commodity futures are up 24%, soybeans up 20%, oats 12%, sugar 11%. So we can't even afford to sugarcoat things anymore. Sugar is out of control. Look at this. Livestock lean hogs up 70%. So your meat prices, like part of the Great Reset, you eat a lot less meat, while the globalists, the elites, the wealth, they can still afford it. But the peasants, they're not going to be able to afford to eat meat for much longer. Industrial metals, lithium up 91%, tin 50%, coal 37%, cobalt 32%, copper 28%, steel 13%. And again, if we look at the commodity indexes, which a few months ago, I recommended, hey, maybe a good way to hedge against inflation is to invest in each commodity index. The CRB index is up 25% year to date. The LME index is up 24%, and the S&P GSCI is up 29.5%. So it definitely has outperformed the S&P 500. And look at this. This is the CPI. Now, this is the official numbers. We all know the real numbers are much higher than that. But even though, if we still look at the official numbers, we can see here that in December, it was 0.2% then January 0.3%, then February 0.4%, then March 0.6%, April 0.8%. Can you see the trend and trajectory we're on here? We are on the trend and we're on the trajectory to hyperinflation. But of course, the Fed's is going to say, suck it up. We can afford temporary inflation while your food bill, your gasoline, and your housing prices skyrocket. I don't think the average American can afford to have transitory or temporary inflation. And now with house prices booming, rents are starting to follow as well, which is very worrying because again, we all need a roof over our head and we all need food. And those two things are absolutely going up parabolic. And this must be stopped because once housing and food prices get to critical levels, people are going to be getting very angry. And even Costco is sending warnings that inflation is abound, impacting a slew of consumer products. So everyone, what this means for us, it means, I think, inflation isn't going to be temporary. It's not going to be transitory. And even if it is, even if it does fall next year, it'll be compounding at a higher rate and the damage has already been done. Prices would have already gone sky high and they say, oh, look, I told you it was temporary. Meanwhile, your food prices are up 50%, your rent's up, 20%, and your gasoline price up 100%. And the Fed goes, oh, see, it's only temporary. People, they're playing the American public like a fool. They're thinking the people can't see their games they're playing. They don't want to admit to high inflation because then they have to live interest rates. Then that's a burden for the governments because they have to pay high interest. It's bad for the stock markets, for the financial system. So everyone, we must keep putting them under pressure to do their job, to lift interest rates for the government to get inflation under control. Because if they don't, this is going to completely send millions of people around the world into poverty. And if they keep delaying the inevitable, it's just going to make the crash even harder, even steeper, and it's going to make the recovery even longer. So everyone, what do you think about this issue? Let me know down below. Now, for all my loyal viewers and subscribers still watching, you're awesome. If you haven't already, please tap that like and subscribe button. I'll keep you updated on the latest happening in the housing market, stock market, and global finance news. If you're bored, I'll put up some of my other videos here. I'll see you all there.